Chairman Larson and Ranking Member Reed and members of the subcommittee, thank you for the opportunity to show you my YouTube video and submit my comments. I'm making the link to this video available to you in case you wish to watch it as well. Social Security 2100 is the perfect school solution. I hope that it clears the other body, preferably on a bipartisan basis. As I mentioned in my 2019 comments, we cannot stop because we have made the numbers work. Too many of the retired and disabled find it hard to make ends meet. The savaging of pension rights has made a decent retirement a rarity, as it is impossible for workers to both save and feed their families. With the pandemic, we find it hard to feed ourselves as prices continue to rise. As usual, recently announced Medicare premium increases are cutting into much-needed COLAs. As I wrote in my testimony to the Appropriations Labor, Health and Human Services and Education Subcommittee of Appropriations, I guess I said that, we needed a COLA last summer, and we didn't get one, and most of us couldn't afford COLA. As I said, even before the pandemic, my SSDI was inadequate for food, medicine, clothing, and cable. I owned a vehicle. There was no way I could maintain it or even buy gas. I have an above-average benefit, high enough to be ineligible for SNAP and Medicaid. Many are not so lucky, even on a good day. The last few months, days have not been so good. Were not for stimulus payments, I'd be running out of food as I write this, and would not have just bought new clothes, from socks and underwear to a jacket that I can wear when the committee finally asked me to testify in person. As it is, I would have used the last $600 from my December payment, which should have come through Social Security, not the IRS, to attend my high school reunion. The sad reality is, parenthetically, I couldn't go. I have Wi-Fi, but I can't afford cable, and a car is still out of reach. Let me underline a point. In most months, new underwear is not an option. I rely on free bus rides due to the pandemic and subsidies from Ride-On, and there is never enough money in that last week before the check comes. When it does arrive, the cupboard is bare. Double underline. Food prices are skyrocketing. Part of the problem may be too much money chasing too few goods, but retirees and the disabled find ourselves between a rock and a hard place. We need a COLA, and we need it now, or we needed it now, and we couldn't even afford COLA, and we didn't get the COLA. We're getting a COLA now, but it's 6 months too late to avoid hunger for a lot of us. So I'll end that portion and say that the theory behind social insurance has two pillars. One, accidents of birth and family size must be evened out so that unearned gains and unreasonable burdens are not a feature of retirement as they once were before Social Security. The second is that because a main feature of capitalism is the transfer of ownership of the products of labor, with the full return for that labor, social insurance returns what was surrendered during the working years. Let me underline that. Capitalism is structured so that the owners of the enterprise get a piece of the productivity, which it's in that system that's appropriate, but it's also appropriate to redistribute some of that advantage in retirement, or find a system that isn't so exploitative. This is especially the case for low-wage workers who make it possible for higher wage workers to avoid less profitable activities like cleaning their own offices or serving business lunches. Social insurance restores what society took from them without just recompense. The value of every minute of their lives on a personal basis is equal to the value of those who are more productive. That includes time with their families, all of it. More is needed than simply reinforcing the status quo, which is what the legislation does. Work must pay well enough so that workers can afford to put money away, as the three-tooled retirement model requires. Note that any employee ownership model would restore pensions and end the need for such furniture. as the three-stooled system. I made a pun, okay? Build Back Better's inclusion of the American Recovery Act's child tax credit provisions is a major step in that direction. It is one of the two things that must be continued to meet our sacred trust for their retirement, as well as their present well-being. This, of course, meaning the low-wage workers, or even most of the people who were the middle class and now find themselves in the working class. As we wrote in July, and many times since then, minimum wages must be increased for present workers. This also increases future revenue to the program and allows for much-needed raises and benefits that will occur when benefit formulas in Social Security are rebased to align with the new labor rates. One last reform is to credit employer contributions on an equal dollar basis and rebase the benefits to account for this as well. The redistributive function of Social Security needs to be accounted for in benefit accumulation. Doing so decreases the need for redistribution on the back end. In 1998, when I participated in online discussions on Social Security personal accounts, and that's back when the Center for Fiscal Equity was just being birthed, I brought up the necessity of doing this. This idea raised the hackles of the privatizers much more than their desire to take advantage of riskier investment strategies. The best way to kill talk of private accounts is to introduce redistribution on the front end and give organized labor proxies to vote worker shares. Under those conditions, those on the left should consider the advisability of personal accounts holding employer voting and preferred shares, with an insurance fund holding enough of these shares to prevent pension loss. Of course, if you do that, the usual suspects on the right will start carrying signs and call us socialists, which technically that is the case. Under those conditions, those on the left, even with personal accounts, we must double down on encouraging employee ownership. Currently, transfers to employee owners are tax-free for founders and initial shareholders. Sales of publicly traded and inherited shares should carry the same benefit. A greater incentive to sell such shares is the transfer of capital gains and inheritance taxation to transaction-based asset value taxes. Such a tax would be much harder to dodge, which makes any incentive to avoid it all the more attractive, such as selling to employees. There'll be attachment links to the original program and to tax reform options, which were updated to take advantage of Build Back Better. Again, thank you. I hope you find this useful, and I hope you post it on the website with these comments. Thank you.